Today is Wednesday, June the 3rd, and the market was up, gapped up, and then just continued to move steadily to the upside. A little bit of a pullback into the close, totally normal, a little bit of profit taking. Volume not exceptional. Volume in the NASDAQ was higher than average, but everything opened up with a gap and just continued higher. So everything is ignoring what's going on in the streets, what's going on with the coronavirus, and the business is slowly reopening. What this is indicating is that the market is looking at 6 months down the road and buying now at prices they think are going to be a bargain. There's bound to be an opportunity to buy a pullback, but let's look at some of the other things like the McClellan oscillator. What we said yesterday when we were at this point was that we were on a bit of a knife edge. We were either going to have the bulls come in and make a new high as opposed to a continuing series of lower highs, or we're going to have this as being our fourth lower high, and we would create a fifth lower high, which would be an indication that the bulls were beating down the market. Now if you draw some straight lines in there, some trend lines, you see that we've got a new trend line, but we've already broken above this one. So now we've broken out, but we've created now a new trend line, and the new trend line is a series of higher highs. This is our zero line. All of this, with the exception of 1, 2, 3, 4 days since April the 2nd, we've had 5 days that have been below the zero line. Everything else, and that's pretty much 2 months, everything has been in positive territory for the McClellan oscillator. When have we seen this kind of a confluence before? Certainly not in the span of this chart, back to April the 19th. If we go and we look a little bit further back, and we can look back here to, that's the same chart. I'll have to get you another one tomorrow. Maybe this one will do. Yeah, there we go. Now we're looking, same thing, we're looking back to 18. So we'll look at that a little bit more tomorrow. But what we do have, and what we're now facing, is a series of higher highs, meaning that if there's going to be a pullback, it's likely to be down to this line here. But the general consensus is now to move higher. Do you buy when the market is high like this? That's a good question, and we'll address that in a second. The stacked volume, oops, there's something the matter there. I've got one too many digits in here, and it's not 51 million, it's 5 million. So our volume stack now looks like this. So we've had 3 days of higher volume, but still lower volume than last week. Better than most of the week before, but you know, at least we got a nice trend going. We've got 3 days. What we want to see on Thursday and Friday now is continuing high volume to confirm this move. Even if it's a pullback, higher volume would be acceptable. And we see the same ratio between number of stocks traded advancing and declining, except the number of stocks trading advancing is going higher. So as stocks are going higher, people are buying it in larger amounts. The summation index continues to amaze, and we showed a chart yesterday with how many times that we get above this area. It's been a while. If you look across here, it hasn't been since January-May period where we were up this high. So we're returning back to that level, all of it being pretty bullish for the market. I still have 5 contracts of SPY put verticals, and on a move up in the market today, I'm going to pull out, and I'm going to wait for, I don't know why I get messages from Tom Tillis. It's because I live in a Republican state. We've now got 3 gaps in the S&P, 4 gaps, 5 gaps, but we've had 1, 2 gaps in 2 successive days. And in the period of 6 days, we've had 3 gaps. In the period of 7 days, 8 days, we've had 4 gaps. A lot of gaps to fill, a lot of vacuum under there. And if you know about gaps and you've been following the way I look at gaps, they all get filled eventually. The market does not like voids. The Dow Jones is well above the 200 EMA and has stopped right at the 200 SMA. Another test, a simple moving average, which is a longer term averaging than the 200 EMA, which weights the more recent days more than the earlier days in the 200 range. So this is a straight average of 200 days, and it's an important point for us to break. If you look at the S&P, and you look at how we broke the 200 EMA, it took a couple of days to do that, and then there was a test. But then we broke the 200 SMA fairly cleanly, only dropped a little bit, did not come and test the 200 again, and still went higher. So we've got to look at gaps, but nonetheless, this is a strong market. Keep what you've got. If you have short calls covering your stock, doesn't matter. You're still delta positive, you're still moving forward. Your negative calls, your short calls are shedding themselves with theta. Your stock is moving forward on positive delta. All of that is good. Apple continues to just rock and is broken out of what we could call the cup and handle. Your cup is here and handle pattern, and that usually, more often than not, will break to the upside. So Apple is moving to the upside on increasing volume, but still not a lot of volume. Caterpillar, shocking advance today. On the day that the Chinese say that they're going to pull back on their commitments to phase one, Caterpillar still moves up. The market, remember, is thinking 6 months ahead. And it is our summation index that also looks 3 to 6 months ahead, and it's bullish. So all of this says that around October to November, the bet is that the economy will be doing better. Now, is that good enough for Donald Trump? That's a political issue. It's not necessarily a market issue. But it would be hard to see the Democrats coming in with a strong market and messing it up. Home Depot, 251, was the only stock that I follow that went down today. And that's understandable because today it traded with ex-dividend with $1.50 dividend. So $1.50 came out of their earnings and the stock dropped $1.71. But at one point it was a little bit higher than yesterday, but it was inevitable that was going to pull back. This is still a beautiful stock to be holding. Nvidia down $3, just channeling. Whirlpool up over 130 now. Really big move. Chiku span stopped by the 200. What does this mean? If the economy is looking good in the next 6 months, people will be buying new washers and dryers, dishwashers, refrigerators, mini bars, what have you. AT&T in the cloud. US Bank up 5.8%, which reminds us to take a look at all banks. We see Bank of America up 5%, Saks up 3%, JP Morgan almost 6%, the XLF 4%, 5.6% for US Bank, 5.6% for Citigroup. So if the banks are moving higher, this is really a good sign for the economy. It means that people are going to be coming to the banks and taking out loans, and the banks are not providing loans at 0% interest. So this is a good sign for the banks. Look at the XLF. Chiku span stopped just at the top of the cloud. Look at US Bank. Chiku span stopped at the confluence of the 50 and the bottom of the cloud. What else have we got that we can look at? Those are the key ones, but there's two really interesting charts where the Chiku span was part of somebody's technical trade. So Global Payments Network is still heading up to complete its rendezvous with this bat pattern. It's going to 198.2. We've just got too many things happening right now that I haven't been involved in GPN. I can tell you that I'm still in Apple, Caterpillar, Home Depot, Whirlpool, AT&T, US Bank, and a couple of dividend-paying mutual funds that I really like, BlackRock, BDJ, and Eaton Vance, ETW, that pay between 6 and 8% dividends every month. Now those stocks aren't doing really well. But that's okay because they are dividend yielders. They shed 6% interest every year. So if they don't grow 6%, that's okay. And of course, I'm also into these AGNC preferred shares, AGNC N, P, and I believe I still also have some Series O, and they are doing wonderful. Can you believe that I picked up AGNCP at $9 at one point, and now it's up to $21.52, and it's paying 6.7% dividend on a quarterly basis. So where are we going tomorrow? Have to say that the market is definitely bullish, but there's nothing wrong with filling a gap. And you know that our McClellan oscillator is really important to us. And where will it go? It could very well go up to this level here, but it also could pull back, and that would then give us another opportunity to come in and test this rising trend line. So rising trend line means rising tide lifts all boats, and that's what you see happening now.